We'll start the recording. All right. Awesome. So, first things first, before we start, I did read someone might try to cancel the fact that politicians have to post trading. Did you see anything? I haven't seen anything about that. I feel like that would definitely be making some more major headlines if that was a thing. Granted, we've caught all the recent trading with the bot. And I do want to talk about it a little bit too, because I did a poll and people aren't looking at it much. Like TEM, what Nancy posted about TEM in December, and the bot caught her trade that she took in November. And I mean, this thing's gone absolutely parabolic. It's sometimes hard to, maybe she took it in December. It's just hard to, it's hard to go through during that time period when the bot caught it. It was catching tons of garbage of just like stuff that doesn't matter. So I wasn't looking at it as much as we tried to hone the filter down more. I think we've got it honed down enough that we've cut out a lot of the trash that doesn't matter. It still picks up a significant amount of hedges. But today, one of the things I want to take some time to do is kind of explain that. Okay, what are we looking at? How do you evaluate all this data that's coming in on your own if you want to? So we'll talk about that some. I'll look into politicians not having to post their trading. I highly doubt that's a thing. I don't know who the new guy is in charge of the SEC, but I do not think we're going to see regressions. Actually, let me change my window real quick to be screen one. That way, when I pop this up, you guys can see this when we go over this. We'll just scroll down a little bit. Okay. So the first things first. There will not be class tomorrow at noon. I will be doing a live stream with the CEO of Edgeful, who's a former Goldman Sachs trader. And will be. I don't really know what his goal is. Honestly, I'm going in a little blind, but he requested that I do a live stream with him, and with our partnership, we're going to do that. Bad echo. Really bad echo on my mic? Can I get a confirmation that's what you meant? Bad echo in the audio? That's wildly unusual. I'm just checking my settings here. Give me a second, guys. This hasn't come up as an issue on the live streams. Let's see. Tell me, does that fix it? Does this sound better now? Oh, okay. All right. All right. Yeah. Awesome. Okay. It's because of the. Okay, I know why that was then. Okay. I lost my train of thought. Give me a second. We're recollecting it. My conscious access is working. So tomorrow at noon we have the I'm doing a live stream with the CEO of Edgeville. I'm not really sure what it's about. I assume we're probably going to do some live trading or something. I know they did a big update with their software, and they're working on some Discord bots that we can utilize as well. It's part of the partnership. I'm doing some advertising for them, and they're providing trading tools for me and for the community. So that'd be cool, right? They're working with like a few different traders on the social medias who they've like verified are like real traders. By whatever means they did that. I'm not really sure. So that's going to be really cool. I think it should be a lot of fun. He's a former Goldman Sachs trader. If you want to check that out, it'll be live on X tomorrow. And then the other thing I wanted to cover is we will be doing up a day to the trade bot. It might be a little buggy tomorrow. So I might be manually typing out my trades while we go through that transition phase. But what that's going to do is it's going to automatically tell you if something's a partial or if something's a full close. It will also be better at tracking percentages of the gains lost. I know that like the AVGO trade I closed today was not like an 8% gain or whatever it said, you know. Obviously, we bought those contracts like 154 and we sold them for, I want to say like 194 and then 250, 256. And then we bought the lottos and we swung those in case we got a sentiment reaction from ARM and Qualcomm, which are actually poor earnings from the market standpoint. I haven't had time to read through these, so I'm not going to have any other substantial comments than just what the price action is. But those are some things that are going on. I do hope that everyone's also been enjoying the content from Monty, Bigger Texas in the Discord. He's a great analyst. He's been posting lots of content. I think he's also probably, out of the people on the team, probably been the quickest to pick up a good flow for classes and everything. And I know he's going to do some more educational classes, like how he uses his scan tools and stuff. Anyways, I hope everyone's enjoying the content. Remember, if you have any feedback or anything, please just let us know. Let me know maybe specifically. Send me a DM or whatever. We're always trying to improve. We're trying to learn and we're trying to get better at teaching people. The other comment I wanted to make is January was probably one of the toughest months on the market. And I know I've talked about this and I've really rattled on this, but I really want to drive this home how difficult this market's been. Because a lot of people are DMing me talking about like real struggles they've had this month. And I want to say that, you guys see all my performance, for the first 4 weeks, I had 1 week where I was literally hovering around a 50% win rate. We came in, we started the year off with a 91% rate, then like a 51%, and then like a 60%, and then we ended the month with like a 74%. That is really mediocre average and performance for me, someone who finished last year, the entire year, with about an 84% win rate. And it's different, right? When you are just get the market directionally just wrong, your macro is wrong, you get burned on a few trades badly, and that makes your month bad. It's different when the market is so volatile and so uncertain that you're not getting things wrong, you're just getting blown out by the intraday price action, even on swings. That is a vicious market, and that's what this was. Because overall, like in hindsight, with our 2020 vision of the hindsight, a lot of swings that we've had have been correct. A lot of our theses for the year have been correct. And this price action has just been miserable. And in my opinion, that's the most difficult market. Being wrong and outright wrong, one, can be used as a lesson for the future. But when price action and volatility are just crushing premiums, or even right now, where we're having a great start to February so far. The win rate's there. We're getting wins, but we're getting really small wins, right? Because all the premiums are inflated with the volatility, and then the moves are kind of mediocre. So, and even when the moves are a little bit better, What is normally a 40% win or higher right now is like a 20% gain. And it's just, you got to take whatever the market deals. Environments like this, I will say, don't last long. So they usually have violent moves, whichever direction the market chooses to solidify. But as you can see, like we're in big inside chop territory. You know, we kind of got a directional move today. We'll see how that really solidifies in the price action tomorrow. But I'm expecting to see more of a resolution between this battle of what seems like some of the market transitioning out of tech and into value names, with like Walmart and Costco performing so well, and financial stocks, and then small caps are trying to catch a bid as well, which is really interesting. You know, TLT starting to get some relief here, but honestly, nothing's really developed a trend at this point. Everything is just kind of bouncing around. It's a market that still doesn't quite know what it wants to do. And it's probably still anticipating a few more headlines. So once those questions are answered, we should get a lot more clear price action, or an event will just blow this out. I think one of those events will be NVIDIA when they finally have their earnings. And this is a really interesting stock right now. But that's the other thing I wanted to mention. It's been difficult. I haven't taken a lot of swing positions. I will say some of our gold positions are working. With GLD, I mean, at all-time highs, and miners starting to catch some bids. Our NEM is doing well. So I'm happy to see that. I mean, we had the GDX position as well, which I didn't even really expect it to perform this well beginning of the year. So I think we're going to get new all-time highs here. And we're going to come back. And I think we're headed towards the 60s, honestly. So I think we're going to blow right through. What is this, a 2020 high? So that's my expectation. I think this uncertainty is really going to unravel, and people are going to swing to miners. But anyways, this isn't a macro conversation, right? We wanted to talk about trading. And I've been doing a few lotto plays with earnings, and lots of people have DM'd me about earnings, and we even saw Abraham sharing a bunch of earnings plays that he had taken, and also I heard him in class kind of go over it. But let's talk about trading company earnings from the buy side. So I'm the option buyer, right? So I'm the person betting that I can beat the market. And part of what's involved in doing that is doing a fundamental review of a stock. Okay, so I would go back and I would say, okay, what's happened the last 3 earnings of this stock? And then when I do that, I'm also going to go through and say, okay, and just see, you know, what type of moves have I got in the past? Okay, that looks like a 7% move. And then we have a 4% move, just to kind of get a rough idea of what the average move for this name is on earnings, and then kind of see if there's a story or there's a narrative or something significant that has changed in this company that would change its trajectory, right? So Peloton, for instance, was an earnings play that I have set up for tomorrow. And we have a new CEO who's made some major changes to the company. We have brand new partnerships when it comes to Costco. We kind of have a roadmap for like a turnaround story from a company that has really been mismanaged post-COVID, right? And that CEO has a great track record of experience, previously working for Ford. He led Apple Fitness as well, was an executive there. And then before Peloton basically bought him out. Starbucks is another example of a story, but I think you guys kind of get the point, right? We have that in the back of your mind, because earnings trades are typically not catalysts. So when you're catalyst trading or swing trading, remember the thesis for my swing trading is I'm looking for events that are going to cause the move in the market, right? When I'm trading intraday or when I'm doing day trading, I'm playing into the catalyst typically, or great technical setups, right? That's part of the ABC rating, right? So typically you want a big catalyst, and we don't consider earnings reports to typically be catalysts. They are planned calendar events that regularly occur, right? Anything like that is not a real catalyst. That is a normal event. So you need to have a different sort of analysis for whether this earnings will be significantly differentiated from previous earnings, when there's to be some sort of significant. And remember, for most technology stocks, they do not make announcements on earnings. So lots of people will always post about, oh, I think this company might announce this new thing on their earnings reports. Most technology companies, and you can always double check this, but most technology companies have like tech days, or they have showcasings or something like that. They are not going to report anything new on earnings when it comes to, a new product line or something like that. In most cases. And you could always double check to see if, you can go to the company website. You can go look at what events are coming up, right? So the next step you have to do is so important. For someone like Noob, he's looking for the elevated volatility and premiums, right? So he'd look at something like this and he'd say, oh, if these high implied volatility contracts right here are probably things I want to sell, because when the volatility gets ripped out, even the stock moves in the direction the market wants, they're likely going to be pretty worthless, right? Because premiums get really inflated into the earnings. Let me double check this. Stock closed at 175. Okay. Before earnings, so that's right here. We're just going to double check this real quick for Qualcomm, because this is what I want to cover. The next thing we want to evaluate, we're going to call it 176. Looks like we're going to have to use the 175 to be risk estimate. The next thing that we have to evaluate is whether the market has already priced in the average move, or maybe if it's priced in a bigger move, right? So sometimes, like, we went for Tesla earnings play, and then we went for LRCX as well. The thesis behind those was that they were actually underpriced for the typical earnings move that those stocks received, right? So let's real quick go over how to do the calculation to understand what the pricing of what the market is pricing in based on the options chain, right? Because when you take a Series 7 exam for like let's say you're going to work for a brokerage, let's say you're going to go work for a financial institution, the way that it's taught classically is actually wrong. So the way that they'll teach you, the way you need to learn for that exam, is that, oh, if this is priced, if the ask is $6, it means the market thinks the stock can move $6. That is not right. Right? So does everyone know what the first step of this is? This is in the education section, but I just wanted to recover it. I wanted to do a review of it because I've been getting a lot of questions about it. Does anyone know the first step? Stock price is 176. We're going to use the 175 contracts. I'm not seeing any answers. Okay. We're going to add the price of the puts. So we'd use about 620 here to the price of the calls. So that's going to be about, we'll call that 725. So we're going to do 6.2 plus 7 point, what'd I say? 25. It's going to give us a 13.45, right? That's going to be our number. Then we're going to divide that by the stock price. Okay, so we have 13.45, and we're going to divide that by, then a misclick there. Where are you getting these numbers? The ask. You guys can see this on my screen, right? The option chain. Can you see that on the stream? So we're literally going to the 75 strike right here on the option chain. And then I'm not taking the ask. I'm just going to the midpoint, actually. I imagine this isn't actually where these were priced into the close. There's probably a little bit of a slippage in the after hours, but this is probably going to be roughly correct. So I'm going to the midpoint between the bid and ask for the puts on the right side and the calls on the left side. And we're staying on the same strike. It has to be the same strike, right? We're going to go right where the stock is at currently. This shows the stock being a little bit lower because in the after hours we got the earnings move. But the stock technically closed at like 176. We're going to go to the closest strike, which is 175, into the midpoint. Yeah. Yeah, so we're doing the midpoint here. So I'm saying that the middle is about 620. It's actually 610. We can redo it for 610. We'll do it right. So we'll do 610 plus 725, which gives us 1335. The 1335, we're going to divide that by where the stock closed at, which we're just going to run. We're going to do divided by 176. This number multiplied by 100 gives us the percent move that the stock is priced in, which in this case is actually roughly about the stock price for the calls. Oh, I'm clicking the wrong thing. Okay, there we go. That's going to give us a percentage of 7.85 or 58, sorry. So now we can do the 0.075 multiplied by the stock price, right? And that says that the stock is pricing in a $13 move. So this stock went $10 basically, about a $9 move into the close here. So if this stock opens up at this price, do the puts make money? Based on the calculation we just did. The options were already pricing in a $13 move, $13.20. The stock only moved $10. Will you make money? I'm assuming 2. Yeah. Yeah, 2. Yeah, 2 equals no. Yep. You're right. You were not going to make money on this play. Right. Exactly like TSM. So it's so important to do this part because options are not just about getting the movement of a stock right. It's about getting them at the right price. We're doing arbitrage. We're saying that this option is not priced correctly and this stock can move more than what it's saying. Yeah. Yeah, I would go 1 week out. So I did the 9-day for this one. I did not do the 2-day. And I would typically do that. I would go when I do these calculations, I always go the next week out. So even if you bought, it doesn't matter where you bought that contract. If you bought way far out the money, if you bought way deep in the money, you're going to get slaughtered on this. It doesn't matter if the stock price moved $10, right? So when you do the calculations and you set up your earnings plays, you need to see what the market is priced in. If you think a stock can have an unusual movement and on a specific earnings, you have to remember that earnings is a known event. Everyone knows it. There's teams at hedge funds and big banks. All their job is to try and price in all the things that could happen on a company's earnings and try and get it right. So you need either a stock that people really aren't paying attention to, because that happens. But lots of people forget that most people working at big banks, most people working at hedge funds, they're boomers. They don't really look at Snapchat. They don't really look at dead small cap stocks, right? So that is where you can find a lot of alpha, right? They're not keeping up with like the newest clothing trend and stuff. People forget that. That is a thing. And you can find edge there, being quote unquote hip. But you need to understand that you need to have the right price for the moves, right? Do that calculation. See what the average move is simply by just looking at the previous earning moves. And then decide if there's a narrative or significant thing that you think is going to be significant on this earnings. And then I always like to buy further out. If I have really high conviction in a company will have good earnings, maybe sustain good earnings, maybe I buy into earnings, but I buy it with like 100 days out. You know, go 3 months and just try to catch a trend. You know, if I think the market's probably got it priced in, I just want to catch the overall sentiment. I'll go really far out the money and really far out in time. That's also viable. You might get slaughtered on the entry and you just let it cook. Maybe you can even average in. But with positions like that, you always have to buy with the knowledge that you can buy more and that you have the convictions to keep that on if it gets slaughtered. Does all that make sense? Can I get some ones in the chats if that made sense? A 13. All right, I see lots of ones. Awesome. So let's look at the option spot. So here's the thing about this option spot. And let's actually bring this up here. So within these options, this thing is tracking real-time data. I pay a very pretty penny for this data. This is real-time data coming to the market. Data is not cheap. Data is very expensive. And I pay a little pretty penny for all this data so that we can have a lot of these tools. But what that means is that, you know, you see a notification like this. Someone bought the Netflix 977.50 call. All right, so I could type in Netflix here. We could go to the February contracts. And we can look right here and see the volume that was bought today. Right here. So there's a total of 2,979 contracts were bought today. And then we can see the bid and ask, right? So it looks like they got filled at 35.18. Looks like implied volatility has increased on the day, which is a sign that they were likely a buyer. 35.18 is more towards the ask. So that means that these were likely bought. Actually bought, not sold. So like what I'm doing here is when people are trying to get filled for, what was that? 1.5 million contracts. They're likely not doing what they can't do the same thing that someone with like a day trader, like my largest position is going to be like 10,000, right? You know, typically for like an intraday trade, that's where I'm going to max out, right? I can, with that amount of volume on a market that moves 500 billion a day, I can kind of try and get close to the bid, or I can go for like a mid price. But if you're trying to fill 1.5 million and you're ordering so many that it's more than are currently available on the market, right? There was only 174 open interests and he wanted to buy 3,000. That means the market maker is having to take the other side of this trade and sell it to this individual, him or her, you know. It could be either way, right? So what they have to do is usually typically go near the ask if they're actually trying to go for a purchase. So that's one thing you can use as like a context clue to say, okay, this is likely a buyer with convictions. The next thing we can look at is, which way is the stock just moving, right? Keep it simple. If the stock's going up, they're probably buying calls, right? If the stock's going down, they're probably selling the calls. And you can go then do the look. Okay, is it near the ask? Okay, then they probably were buying, right? And they're trying to buy. They were trying to get filled in, so they went ahead and purchased the ask. And looking at something with like a wider spread like this, I'd say it's pretty high likelihood that they were a buyer on these contracts. And we can additionally confirm it. If you're looking at the live market, you can also, when this notification hits here, a position this large, this is real key, right? A position this large will cause a change in the implied volatility of the option contracts. So this will increase the implied volatility of the entire chain. And it will even spike the implied volatility. And actually, it looks like this kind of is a little spiked. If you look at the average here, because you have like the 30% down here. There's even a lot of volume there, though. It's not the best example for that. It's better in real time if we look at it. A little bit of variance here. This looks like a volatility smile, honestly. It is playing out. Different lesson, different day. But that's what you want to see. A movement like that, then you could look at the implied volatility. Okay, is it have an increase? Is it rising up, running up into after that purchase? That will also be a signal that someone has purchased those. Okay, we can look at like PDD. Well, just real quick, does that make sense? Volatility smile. This is a volatility smile. The implied volatility is increasing both for the farther dated puts and the calls, meaning that the expectation for the stock to go parabolic to the upside or downside is increasing. It means the market's torn. Yeah. Okay, let's run through another example on the unusual option spots because I'm not seeing any ones here. So let's go down. Let's go look again. We had that PDD one. My gosh, I can't even find the chat. Who made this Discord? Geez, so confusing. PDD. And we had the 110s for May. $110 puts. $5,000. Stock's down today. That already is a point that they're probably a buyer. Probably a buyer who's in the money, making money on that. There's a 13% change on that. This was a big one. Was this right into the close? Yeah, it was. Looks like it took them a while to get filled too, because this was a late report. $5,000. They got filled at 10.8. Closer to the. Oh, they actually almost found a midpoint. Although I'm willing to bet that if I look at the chart here, this probably sold off into the close. No, middling all day. So that does make it a little bit trickier. Let's see if we can. Let me see if I can add this real quick, actually. 1 second. I can't do implied vol change. Okay. Some brokers you can. So this is another example. I'd be willing to say that this is likely a purchase and not a sale. Due to this being having gapped down today. And because of like where it's at. Under key level, sizing up. They're probably looking for like this like wedge to form and then break to the downside. That one's a bit tougher though. You want to see that one when it actually goes up, or have been watching this today and see what that implied volatility did. It's really high for something in the money. That makes me think that this was likely a buy and it inflated the chain. I'd be willing to bet that's a buy. All right. Is this making some sense? Are we starting to piece this together? Stock Block said buy. Oh, I got to go. Y'all enjoy. Thanks, Josh. You say you pay for this data. Yes. This data is not free. There's no way to get real-time options data for free. You believe so. Do we want to look at another one? Anyone? Stock Blocks, you want to go up here and we'll look at one and you tell me what you think. Buy or sell? You're fine. No worries. I did also do a breakdown today, by the way, on one. So I'll try to do a few more of these and explain this, because I did that poll and no one was using it. There are companies who sell access to things like this, and they're multi-million-dollar companies. And there's a reason for that, because even a lot of institutions don't have this data. And so they like to keep track of what potentially other big boys are doing. And that's another thing I actually want to talk about real quick before we go into how to chase rallies. For the breakout alert bot, is it updated every week? You mean the setup bursts? The setup bots? The swing alerts? Swing Alerts is a bot that's not hooked up to the Discord. Oh yeah, Swing Alerts is a bot that's not hooked up. Hey, okay, wait. Actually, I think I have... Yeah, this bot's actually... Yeah, he just did 41% at open. Yes. So this is a trading strategy that I have come up with that I run using a code through my Thinkorswim. And I actually probably a little bit behind on updating it because I've been doing it manually. I like run it in the morning as a scan tool, and then it spits out a bunch of tickers that it's long or short on. So that's what this is. And I'm not surprised it caught a big move because it's actually had some pretty good performance. The win rate just isn't. The win rate, honestly, is not that great, but its overall performance is great because it's catching stuff like this. So I'll try to be a little more consistent on that. But just because it isn't really as good as I'd want it to be or accurate as I want it to be, I'm not going to automate it. And like, I don't want you guys like tracking it and being like, oh my God, I have like a 45% win rate. Because I'm still like beta testing it. So I kind of want to put these tickers up, and then you guys can look at them if you want. Sometimes I do, sometimes I don't. Sometimes I like all the positions I have. I don't like that, or I just don't feel like it's a play for me. You know, same thing with the setup alerts. Like I set these up pretty much nightly when I do my reviews. And then when it goes off, I look at it, see if it looks appealing to me. I don't always take it. There's always going to be some, discretion. That's what we are. We're discretionary traders, right? 10-4 rubber ducky. Yep. Cool. And eventually I probably will automate it. I just want to give it a bit more time. I should have been posting them in there because my goal is to collect that data a bit more. The real-time data. The backtest data is okay. It's decent. But I also want to see like how it performs in a tough market like this. So I can see what previous alerts went off. I can maybe give an update there. Maybe I'll do that tonight or tomorrow. There's a few things I'm behind on. But I also wanted to talk about real quick, and I'll probably do a short on this, but I mentioned something key there. It triggered a little tidbit I wanted to cover as well on this class. There's a lot of people who create content that are advertising trading that have like the trade secrets, how the institutional traders trade, how the big banks trade. And I've even made some allusions to like, these are positions that big boys are taking, right? The unusual option plays that matter are the ones that the banks are not taking. Like, we didn't create this so that we could track what like a hedge fund position has on. Actually, a hedge fund in some cases might be fine. But like, I don't want to see what the banks are doing. And I don't want to see what most hedge funds are doing. There's going to be atypical. There's going to be some cases that's fine. But I don't want to see what someone like on the trade desk at Goldman Sachs is doing, right? I don't want to see their option position. That's actually what we're trying to eliminate from this. Does anyone know why? I'm super curious. You hear all these traders that create all this content. Follow the institutional traders. I'm going to teach you what the big boys do, how they trade, their trade secrets. Why is that completely useless? They don't suck. They usually win. Why wouldn't I care what a market maker is doing? Think about it that way. Sheep move? That's funny. Because you're trying to catch stuff they aren't pricing in. I like the way you're thinking. It's not quite. Stuff under the radar. You're not wrong, but that's not quite what I'm getting at. It's not really under the radar. It's that oftentimes they're trading such large amounts. You have to understand that even a small bank is probably moving a few billion a day in assets under management, right? Not all at once, but in total liquidity. Because a lot of times they're also providing the liquidity for other, like Goldman Sachs is providing the liquidity for like big hedge fund moves, right? So when they're setting up those trades, they're almost acting as market makers. So what do market makers do when they take trades? Like, what's their goal? This is really important to understand. The way that institutions operate. It's also the reason why most analyst reports are completely useless. Like a bank analyst report or like a bank price target. They're trying to take money from you. Yeah, I mean, you're. I like everything you're saying, but it's still not quite right. An institution. Let's kind of break it down here. You guys have seen my charts. You know the way I trade, right? What I do is I go. Let's see if I can actually pull up a chart here that I got marked up. I probably got SPY marked up, right? Actually, do I have it marked up over here? Is this marked up nicely? Yeah. We'll remove the fibs here. So like my strategy starts with key levels, right? Price has a memory, right? And it doesn't end with key levels though, right? Because then I add things on top of it to build my edge. Most institutions or big bank traders, their analysis starts and ends with just key levels. They do not care about direction. The only thing they care about is key levels. And it's partly because a lot of the time they trade stuff like the 10-year treasury, right? Over a long period of time, you know, they'll trade yields. So is this all the data I have for this? I can go back to 1913, right? And there's this would be like a key level here, key level here. There's one about here, right? That's all they care about is the key levels, right? Or they'll trade something like a currency, like a USD, JPY, right? And we can go back to like a 3-month chart. They're gonna have even more data. We could go all the way back. You're gonna find that this always trades like in a certain range. This is probably the worst example, honestly, out of all the currency exchanges. But they only care about key levels because what they're doing is they're saying, oh, when it hits this key level, it usually makes a big move this way or this way to the next key level. This is a major key level that could send it all the way up here eventually or all the way down here eventually. And so when they take positions, they are always hedged. They do not bet on direction. So when people are making these videos, these advertisements about trade, how the banks trade how the institutions trade, they are not looking at an individual stock and betting that it makes a one-sided direction move. There are some hedge funds that will operate that way, right? But most hedge funds, when they're purchasing options, they're doing it also as a hedge against a short position they have, a hedge against a stock position they have, right? Some hedge funds do operate, or private funds will operate with directional bets on individual stocks. But for the most part, when we're talking about the institutions or we're talking about the banks, the way they trade is not directional bets. They look at key levels and they say, when it hits this key level, it will typically have a big move. Like it hits this key level. Well, we've seen that it can have a big move down to this key level and it can have a big move up to this key level. So I'm going to buy the calls here and the puts here, because it's going to be a big enough move that it would buy eventually when it hits the key level. And that's the thing. Time frames don't really matter much, right? They'll buy tons of time. And then it could hit in 2 days. It could hit in a month. It could hit whenever. They don't really care, you know? And the other side, they just let it burn, because at the end of the day, they don't care which direction it moves. And then when you're talking about like market makers and stuff, they're always just trying to stay delta neutral. They're hedged on literally everything. They're just always on the opposite end, right? And then they make the money by selling the premiums, by selling the fees to you, right? That's how your broker trades, for instance. So they make money off all the dead money, all the options that expire worthless. But when you're talking about a desk trader at like Goldman Sachs, the way they're trading, it's always hedged. They very rarely take directional bets on something going somewhere. Does that make sense? So when people are talking about, I'll teach you the secret way, you have to understand that that level of trading, the game is completely different. It's so completely different than what I do. But my process is built off the basic fundamentals of what they do, but then I had to take the extra steps. Yeah, they could force the hand. Right, and if something starts going against them, it's such a great point, Jazz. Because if something goes against them, they can force a move from the market. They have the money to say, this is not going our direction and we're about to lose. If this doesn't go in another week, we might lose. And then they have the volume, especially in low liquidity environments like this, and they do this. Manipulation is a thing. They're, this could have been close to this key level, and they want to go here. And they're like, well, every time the market got over this one, it went to this one, and we want it to go here. So we'll just throw a little liquidity at it near the end of the day. We'll get that last minute pump at the end of the day, just to give all those traders the belief that, the market's going to keep going up. And they'll just force it right across the finish line at the end of the day. And throw some volume at it. Everyone piles in, and in the morning they sell it. They get out and hoping the market continues to run to their key level. They do stuff like that. They mess with their psychology, and they understand the psychology of traders very, very, very well. They know how retail acts. They have tons of research data about it. Do you feel that the market moves more volatile since you can put in triggers to buy or sell? Absolutely. And the market, it does, especially like that's a good example of why it sucks to trade things like silver. You have a smaller liquidity pool than you do with gold, and so it's easier. You have less liquidity. And so it's easier for the big boys, like we just talked about, to hunt out stops. So what they'll do is they'll literally swing the market and they'll trigger all the stops. And then they'll buy the other side, buy all the triggers. If there are triggers to sell, they'll buy it all back, because they can see when you put in an order to stop a position, that order is sent to the broker, and then a lot of brokers, especially Robinhood, turn around and sell that data to an institution, right? The institutions get a live feed. So there's a guy at a desk at a computer, and it pops up on his screen. He's like, oh, okay, well, I'll just sell 1 million of this, snag a bunch of those, and then pump it back up. So like that's one of the reasons why I do not like using stops, because especially when you hit a certain amount of volume, you are showing up as like a block order, and you become almost like a target if you are trading something that's very highly traded. And that can be like a target on your back. Which is one of the reasons why I'm always trading momentum. So the market's always on my side. Because if you're not, you become a target to someone who says, I can just go swing the market, pass the stop, take it. But if I'm trading into something that's trading on high relative volume, there's way less manipulation because the wave is coming. And no one goes against the wave. Which is why that's where I can find edge. That's why I keep my positions small. Gotta keep them guessing. And let's talk about that. Let's talk about the wave. I'm going to use Oklo that we traded today as an example. This stock popped today, and I chased the rally. And I always say this just as a disclaimer, just so people always understand the risk involved with chasing breakouts. I'm always going to operate in a way that's probably a little, when I'm trading lottos or I'm chasing rallies. I am definitely in the mindset of I'm willing to be a little bit more risky with my money than I probably would with someone else's. So I like to make sure that you guys are always aware when I make moves like this on Oklo, buying into this rally rather than waiting for it to have what is obviously going to be retracement after a move like that. I'm willing to chase that, but why? What happened that made me willing to move into this stock? Well, the first thing is a key level break. Right? Is it okay if we move on to the next topic? Everyone following? Typically, I don't trade the number one in this sector. Fair, being poor is a tactic, I swear. It can be. You could be more nimble, and you could be under the radar. The number one thing right here, chasing into this rally. Let's get this off the screen for now. This is creating a lot of noise. We're going to bring that back, though. So we get a really strong pop over the all-time high for this name, right? Young name, strong move, all-time high. We got news that they're doing, that they're getting more investments than they can think they can get more production on than was previously anticipated. Yeah, partnership. So we have a strong catalyst driving the stock higher with the news. We have a breakout of the all-time high. Not only do we have the breakout on the longer time frame, but we actually have a triple top break, right? So the intraday looks amazing for the setup, and the longer time frame key level has broken as well. Now, what would make me probably not even say that this is risky is if our relative volume had spiked more. And this probably typically would be something that has a really high relative volume, but this thing's been actually a heavy volume for quite some time. And so it's a 14-day average for ARVL. So even though there probably was a really good amount of volume that drove this up, it didn't quite get over 1. If it was over 1, though, even after all the huge volume that had been poured into it, that's when you can really take some size into the rally, depending on how early you are. If you want to know how early you are, that's when we go into ATR. ATR is the average true range of a stock on any given day, right? So you can see the daily range on this stock. Typically, it moves within a $6.43 range, right? So the blue line here and the yellow line here mean that the stock is trading within its normal range. No significant breaks. If it never gets outside of either of these levels, it's not really, it's just normal daily volume. So when a stock like this kind of hits your radar, should be on the first day where it does something crazy like this. Where it kind of, this actually doesn't look like it's set up correctly. We're going to use an example. So like the first day a stock breaks through all the upper ranges, it's kind of hard to see that that's the top, right? Bottom, the top. As you can see, this isn't actually aligned with the open because this indicator is meant to be like a daily indicator. But what you're seeing there is, what it's showing is that the stock blew through all the ATR levels, right? It traded, looks like almost, what is that? Double its ATR on the day. That, along with the high R vol, If a stock's been trading within that range for a while, it has a day like this where it blows through all the ATR levels, it has a high relative volume, that could tell you that a persistent momentum move is happening. A new trend could be forming on this stock. That is the type of rally that you can buy to and even roll into the next day and look and see if you can catch a continuation, because the stock has broken from its from its ATR, right? Even better if you're getting the key level breaks, right? We had the all-time high break. We had the great intraday setup breaking right through the triple top, right? And even when it was breaking through that triple top, it really hadn't become overbought yet when I had purchased it. And then when we're looking for the point to sell, because I didn't sell the top, it kept running. I was looking at the 5 minute, looking at how extended we were from our bullish EMAs. So typically, once you start to get too far away from these EMAs, I think it was even more exaggerated on the 15 minute. Yeah, this was this was Icarus, right? Flying too close to the sun. It's got to come back here, come back down here, test this a bit. Even came back and tested the other bullish EMAs here. But when that starts to get too far extended on here, and I see the RSI really starting to cook, I might look for a back test of this EMA and then try a re-entry. Right, so we traded this stock a lot actually today. But again, this break right through all the levels and still maintaining persistently high on the day, also defending our EMAs. Tomorrow, I will not be surprised at all if it attempts to do the same thing again and break right through all the ATRs and go to yet more highs. And the day where it stops doing this will be the day that the trend probably rolls over. All that makes sense? Cool, guys. Cool. Awesome. Well, it's getting kind of late. We went kind of long. We covered all three of these. Google Trade. I'll tell you what, we might cover this. We might just spend Friday and do just trade reviews, because it's about 9 o'clock right now. And I've got to work on a few things before I go to bed. Okay? How was class today? Got to get some ones. The class was good. We learned some stuff. We had some good takeaways. Is Josh the best teacher? I think Noob is. Noob is the best teacher. A lot of you guys talk to me about Noob. I see he's not in here. He's actually on vacation, so he probably will not be teaching class next week. I think he's currently I think he's seen the Grand Canyon with the family. So he took the 4 boys, the wife, all to the Grand Canyon, and I think he's going to Vegas for a little bit too, doing some gambling. So he probably won't be around for a little bit. But I will say a lot of you guys have messaged me about Noob. That's kind of hard to follow his classes and stuff. I just want to let you guys know that behind the scenes, we have powwows, we have conversations about how he can step up his game. He's actually going to gamble for the first time stock blocks, but he loves to gamble on the market. We all got a little bit of that in us, you know. We are working on like the structure. I know, a lot of you guys saw that he had a PowerPoint in the last one, so we're working on it. Our goal is to teach you guys, and just like you guys are new at trading, we haven't necessarily been teaching for very long, right? We know what we do, and especially someone like him who's just a numbers guy, and I know I bully him a lot, but he's really smart and he's not very good at articulating how he does what he does, but we're working on it. So we'll improve how we teach, especially for him. He knows he's got some work to do, but he's working on it. So patient with him. He's got a lot of good information to give, though. I've been training with Abraham for a very long time. We're going on 4 years now, every day. Yeah, it can be. But also getting better at teaching something kind of also solidifies it, right? In my opinion, true mastery is the ability to take something complex and explain it in a very simple way, right? So if you guys are having trouble understanding something extremely complex, then the issue, in my opinion, might even be that I don't have absolute mastery of it. So that's the way I look at it. So I should be able to take what is extremely complex and simplify it in a way that anyone can understand. And even just explain things like a dad. Yeah. He just gets frustrated because he's like, why don't you just get it? You know? He's like my genetics professor in college. My genetics professor was like that, and the students hated him. The first exam we got back in that course, the average grade was like a 43%, and I got like a 60%. And I got that exam back. I didn't know the average, and I thought, whoa, I'm an idiot. I'm never going to pass. I can't get this degree. I'm a moron. What am I going to do? And he's like, and the average was a 45%. And no one was really catching what was going on in that class. So it's just like that, right? And in his head, he's just like, why don't you guys just get it? You know, I get it. You know, that's what happens when you've been doing something for a very long time. You forget what it's like to be brand new and not understand any of it. Because he's a dad. I'm a dad too, you know. All right, guys, I got to go, though. It's getting late. I hope you enjoyed the course. I'm going to end the recording here. I'm going to get this uploaded. And then I'm going to